Let's move on to old economy. Vedanta was in focus in yesterday's trading session. There was a breach of its process water storage pond at its Lanjigarh alumina refinery in Odisha. The companies said that the situation is fully under control and there are no disruptions in the current operation. So to discuss this and more on the metals sector on the whole, we do have Aditya Welekar, who's the senior research analyst at Axis Securities, joining us. So Aditya, first up on Vedanta itself, yesterday when the news came by, the stock was doing well. Thereafter, saw a bit of a sell-off on worries that this may escalate. But now there has been some sort of clarification coming in from the company. Things not to worry right now, but you never know what happens, right? So from that standpoint, how are you looking at Vedanta in particular?
Yeah, good morning. So the clarification from the management is a kind of relief, I will say. But we will still follow the story and we'll see if there are any one-time expenses if the company has taken future. But so far we will go with what management has said, and there has been no damages and no breaches. So that's a relief as of now.
How much does it account for in your overall scheme of things for Vedanta?
Fundamentally, the stock is having a good amount of unfolding of story to take place. So they are integrating their aluminium division, their raw material for bauxite, coal, and alumina expansion is happening. So the aluminium cost of production is expected to go down from current $1,700 per ton, and they have an aspiration to bring it down to $1,550 per ton. And they are increasing their aluminium production from 2.4 to 3 million ton, and for that they will be integrating their alumina. Currently they are consuming the captive consumption is 40%, so that will increase to 100%. The coal will also get fully integrated to 100%, and bauxite sourcing will also, the bauxite imports will also come down from 50% currently to 7%. So all this story will unfold by FY 27-28. So that amount of tailwind and further the demerger which will happen. So all these tailwinds are still in the stock, and aluminium will be one of the biggest divisions of the company going forward. And for aluminium, we see the fundamentals are still in place. The Fed rate cuts, then the alumina prices are quite high, so that is providing support to aluminium prices. So aluminium prices are now trading in the about $2,500 per ton. So overall, in the long term also, aluminium as a metal has a good amount of tailwind provided by these renewable theme, the electric vehicle and all those things. So as compared to steel, aluminium is a good place to be invested in, and Vedanta offers that kind of opportunity in the long term.
Okay, Aditya, we don't want to be speculative here, but just to, get a handle on this, you said right now captive sourcing of alumina is 40%, right?
Yes.
From Lanjigarh. Now, for whatever reason, just in case, if for whatever reason this escalates and there is any kind of a temporary stoppage at this facility, just trying to understand, what would it take to source alumina, additional alumina from the external market? How is pricing playing out and what could be the possible hit? Just worst case scenario.
Yeah, so currently alumina prices in the external market, they are trading at a very high level. The spot alumina prices are in the range of $570 per ton. So this is due to the supply shortage due to several reasons. One of these is the supply dearth from Rio Tinto and then some domestic bauxite issues in China. So alumina prices are at a higher level. So if they have to source more alumina externally, then that will put some amount of pressure on their cost of production of aluminium.
You're positive on the stock? What's your target price?
So currently we have it under our soft coverage, so target price I can't give. But we are, as I said, we are structurally positive and aluminium as a theme, and for Vedanta in particular, because this aluminium total raw material integration story is yet to play out. Further, they have more tailwinds like demerger is yet to play out. Then they are expanding their zinc power business. So multiple triggers are there.
All right. You said that you are more positive on aluminum than all the other metals, but let's get in a word on all the other metal stocks as well. Steel in particular, what are your thoughts on, say, JSW Steel, Tata Steel, all the other steel players? What is your call? And we have the US FOMC meet outcome as well. If there is a decline in dollar index and a decline in US rates, typically that is positive commodities. So to that extent, what's your call on the sector and top picks?
Yeah, so that FOMC Fed meet will have more positive impact on base metals, particularly for aluminum, copper, zinc, and lead. For steel, the impact is slightly getting negated because of the slow demand in China. There are no signs of any stimulus coming out from China. As well, the numbers which are coming out from Chinese economy, they are not very encouraging. So the steel intensity is definitely not picking up. But as we come out of the monsoon and we enter this autumn season in China, and these Chinese New Year holidays are kicking in from the first week of October. So there might be some restocking in iron ore and steel. So we have to keep a track of it. But structurally, steel as a story, it needs a support from construction property sector, and which is not doing well in China so far. So, and the policy narrative in China is not in favor of giving stimulus to property sector. So the demand is coming from machinery and infrastructure, but that is not fully enough to compensate for the loss in demand from the construction activity. So we prefer non-ferrous stocks like Hindalco, Vedanta over steel stocks. Within the steel stocks, we prefer the non-integrated players like JSPL and JSW. We have a hold rating on Tata Steel and SAIL. These stocks, they have multiple headwinds, mainly because of these fall in the steel prices. Further, Tata Steel, they have a long restructuring activity to undertake in UK. SAIL has a long capex announcement, and they are increasing their production capacity. But their history of capex execution is not so great. So, in the backdrop of the in the subdued
Right.
steel prices, we prefer JSPL and JSW. And as I said, in non-ferrous, we
Right.
prefer Hindalco and Vedanta.
Hindalco, Vedanta, JSW and JSPL. Thank you so much, Aditya, for joining in and giving us your views on the entire space. We take your leave on that note. And